You ready to go?
Oh, we're rolling.
Do a countdown.
Do the countdown.
What are we doing now? CPA. Too much stuff, I'm telling you. Stacking it.
Thank you.
Too much stuff. I'm not gonna come up on your part. Instead of stacking it.
We're back in session. We're going to jump around a little bit more, or again. Let's go back up to new business. We've got two items, and basically they're pertaining to the same thing. So, Ms. Holt, if you would, go ahead and take care of the North Carolina Department of Transportation supplementary agreement and the budget amendments.
Okay, the first one under new business is North Carolina Department of Transportation Supplemental Agreement for Economic Impact Study for Highway 70 and Interstate 795. I'm going to read a portion of this agreement. What this agreement is doing is giving us an extra $15,000 for the project. The total project cost that we have on our budget for 13-14 is $315,000, but the total project came to $364,533.16. When I was talking with the state, I asked them, I said, well, when we get to the $350,000, who's going to pay the extra $14,000 that is in the total project costs? And they had just said, well, just have the bill sent to us then. But in the meantime, I guess they decided they'd give us the extra money, and this is what it is. So we will be paying the entire cost through Wayne County. Whereas the department and the county on 2/7/2012 entered into a certain locally administrated project agreement for an economic impact assessment to determine the economic impact to eastern North Carolina from improvements to US 70, and a supplemental agreement on 8/12/2012 to add to the scope an economic impact study of the proposed continuation of I-795 from Wayne County connecting with I-40 in Sampson County, programmed under Project M445. And where the department has agreed to provide an additional $15,000 for project cost. Now, therefore, the parties wish to supplement the aforementioned agreement whereby the following provisions are amended. The department's funding participation was $350,000. The department agrees to reimburse the county an additional $15,000 of state planning and research funds. And I hope this is up for approval. And the accompanying budget amendment.
Mr. King,
I move that we approve this.
a motion on the floor. We adopt this resolution. Any other discussion?
I have a comment.
Mr.
Real
King.
quickly, DOT has really stepped up to the plate. We've been needing an economic impact analysis for several years, in particular the 795-40 connector and Highway 70 with the new interchanges. And DOT stepping up to the plate and spending this kind of money is just paramount in what they have done, even going beyond and taking care of this at the state level. I just want to tell and go on record that our NCDOT locally, regionally, in the division, and in the district have really pushed this. And I'm excited that I know the other commissioners are, in particular those in transportation, are real excited to see this study possibly within the next 30 days. Thank you, Mr. Chairman.
Anyone else? Mr. Doherty.
Mr. King, would you also add to that the budget amendment appropriate with that agreement?
Sure.
Thank you.
Have a motion on the floor. All in favor, sign of right hand. Motion carries unanimous.
Okay, we'll move into the budget amendments in your agenda package, and also there's two walk-ons. The first one is number 230. It's from the Social Services Department. It is an increase in administrative revenue. It is an increase in the Progress Energy neighbor line item of $6,366.68. Share the Warmth Piedmont Natural Gas, $694.69. No county dollars. Grant revenue, $7,061.37.
Mr. Chairman,
Mr. Pate.
I move for approval.
Have a motion on the floor. Any comments, questions? If none, all in favor of the budget amendment, show sign of right hand.
Your next budget amendment is number 235. We'd like to stay in the sewer business, so I have Mr. Tim Rogers here to help talk about this one. We're increasing our sewer fees by $60,000. We did annualize the cost through the end of the year, and it's going to take $60,000 more in sewer costs for our landfill, and we're appropriating landfill fund balance. And Tim, I have Tim here to explain this.
Explain it to us, Tim, please. I know you have to me, but explain it to us, please.
Well, there's two reasons that this line item needs to be increased. The first is rainfall. We get an average of about 40 inches per year at the landfill, according to our records. This year, we've got almost 60 inches. I think the gentleman earlier mentioned July, we got almost 12 inches of rain. So we pumped, we averaged, last year, for instance, we pumped 5,832,000 gallons to Goldsboro, and this year we pumped 9,317,000 gallons. Like I said, one of the reasons is the rainfall. The second reason is we moved in our new sale in July. Once we started introducing waste in our new sale, the state says we have to treat all rainwater that enters that sale, all 22 acres, as wastewater, because there is a chance of it coming in contact with the waste. So that's increased a lot since we've had to do that. Once we get our footprint filled, which we're working on that now, we've been in there about 6 months. This will decrease drastically after that point. But we basically got a 22-acre bowl sitting there, and we have to treat every bit of the rainwater that enters it. There's no other choice. So between the rainfall, the increase in rainfall, and the fact of us having to treat all that has caused us to have to increase this the line item by that amount. But we may not spend that amount. I have no idea, for the rest of the year. Normally our average is about $45,000 a year. That's what we spend on sewer costs, and we're already at 60. So that's basically where we're at, and like I said, it could be 30 more thousand, it could be the 60, just not sure. No way of knowing. But that's the reason we're asking for this.
Any questions for Mr. Rogers, Mr. Camardi?
Well, when I look down at item number 2, it says reasons for the above. It says increase in fees due to moving into the new sale. Increase in fees, explain that a little bit. Increase in fees.
Well, what we mean, our sewer fees have increased by us moving in a new sale. We've had to treat all the extra water, stormwater, as wastewater.
Do you mean increase fees to what you have to pay to someone
Right,
else,
that's
but
right.
not what?
That's right.
not
We may
what-
could have worded that a little differently,
Okay, 'cause I was-
but basically we're having to pay them more because
Hey.
we're having to treat all that. Before we moved into the sale, we could pump it out of we were pumping it out of the
And you-
sale into the ditch. I mean, and it was fine to do that.
Them is who?
Goldsboro.
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 Okay, that's what I'm trying to find, the trail we lose to.
Goldsboro, yes, sir.
Because it would, okay, you're needing this new money to pay the fees to Goldsboro.
That's right.
Because if the public was just listening to this, they may think that all of a sudden the public is getting charged some more fees to bring something to you that will cost them
No,
less.
like I said, we may have worded that a little differently.
Okay, that's fine.
No,
But
that's not the
for the
case.
public consumption, and from my understanding, I would just want to be
Yes, sir.
understanding that, okay, who the fees and what you meant. Thank you, sir.
Mr. Doherty.
I think this whole session has been about wastewater
Yes,
and sewage. But that said, do you know how much the rate that Goldsboro is charging us per 1,000 gallons to treat that sewage?
I am not sure, because Miss Janice Rice takes care of that. She sends us the bill, and she kind of handles that. I think it's around $5 a thousand, but I'm not exactly sure on that.
I don't have that amount with me either.
Well, and that was
We'll
the
get it for you.
figure, that was the figure that I did hear, and back to Commissioner Camardi's comment, and that is, as the rainwater has increased, so has the flow to the city of Goldsboro to treat sewage. And the cost of treating that sewage, according to the city manager, is less because it's diluted. And I just think that we need to meet with the city of Goldsboro and renegotiate our rates based upon this increased flow based upon rainwater.
Yes, sir.
It just sounds reasonable that if it's a rainwater which is diluted down, it certainly should be less to treat that.
Well, you would think that. I'm not an expert
And he's
in it, but,
acknowledged
yeah.
that. So I would ask that you meet with the
Okay.
city of Goldsboro and see if
We
we
can
can negotiate
absolutely do
rate.
that.
Thank you, Mr. Chairman.
If I could have 1 second, just in
Marty.
defense of what they charge and the prospect about, I went over there and said, we talked a little bit about that. And it sounds like it may, Milford, I believe, and may have alluded to the fact that the thicker the sewer is, the more complete it is, and the thinner it is, it's still gonna cost, because there's a correlating thing that we all don't understand here, but I kept asking that question until I could find out if that really thinner meant that you could do it a lot less. That may not be the case, but it's worth a deeper conversation so that we can all understand it better. But
Yes,
thank you, sir.
And Mr. Bell?
When I was in college, I took a course in active listening, and I think I heard the city manager said that if he decreased cost in one place, he's going to cost somewhere else, and I live in the city, so.
And Mr. Bill brought that to my attention during the break.
I move adoption of Budget Amendment 235.
Have a motion on the floor. Any other questions? All in favor of the motion, give us the right hand. Motion carries unanimous.
Thank you.
Tim, right quick before you leave, I just want to say thank you for the County of Wayne, for you and your staff's work last Wednesday. I know y'all are normally off on Wednesday. He pulled his crew in and worked all day on Wednesday and pulled off something that we didn't think could happen, and I just want to thank you. I'm not singling your department out above any other departments, because all the departments did, but you just happened to be here today, so.
Well, I appreciate that, and I want to thank my staff because they did work very hard to get that done, make sure we could get open and everything was taken care of, and I do appreciate that.
Thanks, Tim.
Okay, your next budget amendment is number 233, and I'm going to go ahead and add number 241, walk-on, right behind that. And at this point, I'm going to just ask Donna Phillips if she'll accompany me up here. This has to do with the Steele Memorial Library. Number 233, and I'm going to kind of go backwards here into our original budget. When we adopted our original budget, we had in our cost some of the technology and the furniture and the IT. We took it out before the budget was completed, and we have it over in a capital reserve because we didn't know the exact cost at that time. So this is where you're seeing these costs now appear for the Steele Memorial Library. Number 233 is the technology piece that is being done internally by your IT staff here, and these costs actually came from our IT staff. So we are moving $171,035 from our county capital reserve fund, which has been put over there previously for this library, into the 465 fund for the capital Steele Memorial Library. If you need a breakdown on what the 171, I'll be able to gladly go over that, but it's all technology cost.
Chairman. Mr. Mayor.
Make a recommendation, we accept budget 233, budget amendment 233, and 241.
And number 241 is the books for the new library. That's $300,000.
I have a motion on the floor. Any questions or comments?
Ask questions. Yes, sir.
King.
As the agenda this morning meeting, we mentioned about the cost of the funds in the reserve that these funds are coming out of, and that was $5 million.
5.4.
That money, the $300,000 for the books, are there going to be any more monies needed? Are there any other monies needed for books going in, or is this the first? Or
That's the total amount for an opening day collection that we're going to request for the library, and that was put into the capital improvement plan, so we planned for that. And since the construction project has moved along a little more quickly than was anticipated originally, it is time, and we've already started meeting with a vendor for that opening day collection, and he is needing an answer by the end of this week, so that's why I had to ask to get on the agenda today. But that is the amount of money that we would request for books.
Good, okay, and then IT, any other items for IT going forward?
I think as far as I know, that is complete.
Okay.
They did a lot of research, and I have a lot of backup on that here.
All right. So what we're seeing then is the fruition of leaving all of this out of the per square foot price of building the project, which was, what was it in facilities? Per square foot on the, I can't remember that figure.
About 110, is that what it was? Yeah, I believe it's about.
It was way up there, 150, 60, whatever. You know,
Start with, yeah.
It came down to 121 or something like that.
Yeah, 120, 120.
But here again is the evidence of construction costs versus sustainability in items that it takes to run the system. And I think we're seeing that, and it's in line, I think, and doing a good job at completing it all out at this time. So when we do open up, then I, as a commissioner, understand that that's the cost, and there's nothing that's going to be surprising, later on down the road that we can see. So thank you for keeping me up to date on the IT cost and the book cost. It puts it aside of the construction cost. Thank you.
With that said, we wanted to bring you up as a board. The budget amendment is not here in front of you this time because the bids are out now for the furniture. And so that will probably be in the February 18th meeting. Is that correct? Mm-hmm. And that's going to be anywhere from, say, $400,000 to $500,000 on the furniture. That's what we're estimating at this time.
I think the original cost was somewhere around 5, maxed out.
That's correct.
And are we still looking at spring, maybe?
Sounds like possibly May, sometime
Good.
in May. And
Okay.
so actually, we have furniture vendors here waiting for me. They've been here since 10,
Right.
waiting. But we're going ahead and getting estimates on that. It's time to do that. We're hoping to get those children in that library for summer reading
There you
this summer.
go. Yes, we're on thank you.
Mr. Chairman,
Mr. Pate?
just a couple of quick things. I don't need you to go over the IT information, but I get those documents so I can take a look at them.
You sure can.
And when you do that step with the furniture, can you get me a chair?
Okay.
It's killing my back. I'm kidding about that. Thank you.
So you'll have the IT portion and the book portion today to vote on with budget amendments, and the furniture will be coming probably in 2 weeks.
Any other questions? Have a motion on the floor. All in favor, show of sign of right hand. Motion carries unanimous.
Thank you.
And Mr. Pate, pertaining to your chair, we have to buy them for the judges, but we don't have to buy them for you now.
Your last
Can I
one,
bring my own in?
your last one, which is also a walk-on, comes from the WIC and Maternal Health. It is, I'm just going to read this. This amendment is needed to cover the cost of utilizing a temporary agency to supply us with a nutritionist to assist with the conversion to the crossword system in WIC. There are currently 5 vacant nutritionist positions in this program, with 2 that have been vacant since the beginning of the fiscal year. We're asking to utilize lapsed salaries from the existing nutritionist vacancies to cover the cost of temporary and part-time nutritionists until such time as we fill these positions. This amount will cover 16 hours a week, February through June. Okay, this is decreasing the salary and wage, that's your full-time line item, by $25,300, increasing an extra help line item by $8,500, increasing professional services by $16,800, decreasing another $8,500 in salaries, and increasing another $8,500 in extra help. What they are doing is shifting full-time money to part-time money.
Mr. Chairman,
Mr. Darty?
I move adoption of Budget Amendment 239.
Have a motion on the floor. Any discussion or questions?
Yes, sir, Mr. Chairman. Being that we are in February and we'll be working on budget March, April, May, or in June approval, the WIC program, who brings that to management for the budget?
You would be Mr.
Next.
Madden and Mr. Kinstern.
Okay. You sit on that board, Joe?
I do.
Okay. My question then would be to look at how the WIC program is going to be funded, specifically through state mandated or not unmandated, particularly what the federal government will be doing with that program. I think that's ask David to look into that. For our upcoming, I think there's going to be some changes in that for next year.
I understand they are looking.
We'll be watching it.
Thank you.
Anyone else? A motion on the floor, all in favor, show sign of right hand. Motion carries unanimous.
That completes the budget amendments.
Okay, we're not but an hour and a half late on our 10:30 work session. Do we go ahead and get started on it? Pleasure of the board.
Mr. Chairman, could we address the consent agenda? I think we discussed that already, and I'm prepared to move on adoption of the consent agenda.
Is that in form of a motion?
I so move.
I have a motion on the floor for the consent agenda. Any questions or comments? None? All in favor, show of sign of right hand. Carries unanimous. Council, Ms. Wilson, we read the 11:45. Did we go ahead and start this?
The audit report.
The Wayne County Comprehensive Annual Financial Report for a period ending on July the 30th, 2013.
Each of you should have it out.
That's
So you
the
can see.
condensed version?
No, it's the one you can see.
Paul and Dana, I do apologize for us running so late, but we've about got accustomed to it.
It's okay, it's okay.
We'd like to welcome Mr. Paul Nunn and Ms. Dana Lang with numbers share.
Thank you, we appreciate the opportunity to be here. Must be getting close to lunch, everybody's waiting. Yes. Right, Dana?
That's right.
Okay, I guess everybody's got their hand out. And this is just a very condensed portion of the audit. This is our presentation. And first, we think that the finance department should be recognized, and they have been recognized for receiving what is known as the CAFR, which is Certificate of Achievement and Excellence in Financial Reporting. That's for 17 years in a row. Not all counties or municipalities receive this, and they certainly deserve recognition for doing so. And the next slide, the Wayne County audit results. We're responsible for issuing our independent auditor's report, and we have issued an unmodified opinion on the financial statements. And this is the highest level of assurance that we can issue that the statements are free of material error and fairly represent the results of the county. Our responsibilities are the opinion, which we just gave, and that we gather enough audit evidence to support that opinion, and we have. You saw the amount of stuff we collected, you agree. And then we provide supplementary and other information that we deem appropriate and necessary to help you interpret those financial statements. And all that's included in the statements themselves. The next is the MD&A, or the Management Discussion and Analysis section of the report. And we encourage everybody to read that. It's about 9 or 10 pages. It has lots of very good information in there. It includes information on financial highlights, overview of financial statements, comparative figures, budgetary highlights, the economic factors that came into play in establishing the next year's budget, and it's all very worthwhile reading. Okay, now we're going to get into the financial statements and some of the numbers.
He's going to let me take over here. These start on page 25 of the actual full statements, but these are what's known as the government-wide statement, or the statement of net position. And this will include all your governmental funds, your special revenues, and your capital project funds, and that's the governmental activities column. And then you have your business activity columns, and that's your proprietary funds like your EMS and your sewer and your landfill and things like that. And then, of course, the total column here. You have total assets of $192 million there, and then you have total liabilities of around $45 million. Something called deferred inflows of resources. That's new this year. the accounting profession likes to keep us changing. So it's really prepaid things or prepaid taxes, people that paid taxes before they were actually due, before the end of the year, or if you had prepaid a little insurance, as the county might have paid some insurance before they actually had to, or some prepaid payments like that. And then your total net position for the county is $148 million. Our next is the statement of activities. Again, this is a government-wide statement, okay? This shows your expenses for governmental activities in general government, public safety, transportation, human resources, and those different types of breakdowns. Shows that the government spent around $96,800,000. Your charges for services were around $8 million, had some grants around $20 million. Okay. The next page, still part of that same statement, it's just so big, it would have been really small to read, so we separated it onto 2 pages. You have your business type activities, around expenses on solid waste and the EMS and things like that. So you had around $14 million in your business type expenses. Again, charges for services there were around $10.5 million, and you had some grants of around $1 million. And then down below, you can see the various type of revenues for like property taxes and sales taxes, vehicle tax, some investment earnings, and some various miscellaneous things where you transferred some revenues from government activities to your business type activities, and for a total change of your net position of an increase of $4.5 million. Now, I know that's a lot of numbers on a page, but our next 2 will show you some graphs which really give you a visual representation of how the county has spent their money or got money in. The first one's revenues. So you see your property taxes, of course, is your biggest revenue source of around 55%. And then you can see where your biggest pieces come. Sales tax, 17%. Human services, that's primarily grants and things like that. That's around 20%. And these are where the different pieces of income comes for the county to operate. And then the next slide, of course, shows you by your expenses by function. Again, where you're spending the bulk of the money is, of course, human services around 33%, education at 26%, and public safety at 22, almost 23%. And those just give a good visual representation of that previous financial statement. Okay. Next, we kind of took out on page 28, we took out just the general fund, because the general fund, of course, is the one that you have probably the most freedom to operate with. And this shows you your assets, which are around $67 million, your liabilities, which were $1.3 million, your deferred inflow of resources, again, that's a new accounting this year, and that was more like accounts receivables and things like that, which is $4 million. It leaves you around a total fund balance of $61.7 million. That unassigned $28 million on the bottom, we went over that in December, so we really felt we didn't need to go over that in full detail at this meeting. So, but that's where that figure came from that we discussed in December. Okay. And then the next page, we brought in the actual revenues and expenditures of the general fund and kind of compares it to budget. You'll see that the total revenues for the general fund was budgeted at $97 million. You actually ended up with $99 million, so you exceeded your budget there. Your expenditures were budgeted at $107 million. However, you only spent $92 million, so you came in under budget. With a few transfers and a little bit of sale of assets, you actually increased the general fund budget by, your general fund balance by about $5.4 million there. Okay. So now I want to go over some other letters. We issue several types of letters, not just the independent auditor's report, but also what's known as some compliance reports, okay? So we issued also an independent auditor's report on internal control. This year we had 2 findings. 2013-1 of payroll software installation, which has more details on page 159 of your full audit. We also had a finding on 2013-2, which was on the state retirement file. The payroll software installation, there were, of course, a few issues with that, which was reported for timely bank reconciliations, some lack of segregation of duties, and some payroll overpayments. And then the state retirement file had issues where the state did not receive timely filing of the retirement file for 7 of 12 months during the calendar year. We issue an independent auditor's report on federal programs and the compliance with the federal programs. We had WIC eligibility findings where you can read more details on page 161, where we had 6 of 75 cases tested that had eligibility issues. And finding 2013-4 of subsidized childcare, we had eligibility findings, and there were 4 of 75 cases tested where we had findings. The independent auditor's report on state programs, we had no internal control matters noted where we had any issues of any of the programs that we tested for state. We also issue a report called a communication to those charged with governance. In those, we cover things like if there were any change of accounting policies, which I mentioned earlier on that one net position last year. It was called net assets. Same thing. Deferred inflows last year was, prepaid assets or prepaid expenses. So there was a little bit of a change of accounting policy, which you could read more in your note disclosures on note 16. We talk about whether there was any accounting estimates, and there are for like doubtful accounts and accounts receivable, or depreciation is an accounting estimate, and some of those things are noted in that letter. We talk about whether there's any difficulties or things like that, of which we're not saying that there were any this year, but that's another letter that we issue. And then we also issue a letter called a communication of no material weaknesses, and we did not issue any material weaknesses this year. That's the next slide, please. Thank you. However, we do also use that opportunity to give the county other recommendations that might come up while we are out auditing. And we have 4 recommendations that we have given the county this year. The first one is on charging of costs to federal and state programs, and that has to deal with the IT virtualization. Costs were automatically charged to programs, and you can't do that to federal and state programs because some programs need pre-approval at the state level, and some IT costs were charged to the WIC program, I believe, without pre-approval from the state. So we suggest that these costs don't get automatically charged, that they look and find out first before you just charge to a department. We suggest conflict of interest statements be considered signed by all employees that work with state and federal programs, because it is a requirement for a lot of the state programs, and it would just be easier to just say any employee that works with the state or federal monies to sign a conflict of interest statement, and that way you would be covered. We made a suggestion to audit your self-insured insurance program because of a testing we did with your self-insured program and the findings we noted, which are detailed in this letter.
Question.
Yes, sir?
Is that through HR?
Yes, sir.
Thank you.
And then we also have noted in there that we suggest you consider hiring what's known as an internal auditor and have a position for an internal auditor position. And those were other recommendations that we made in our communication of no material weaknesses. And that's where we're at with this.
And the internal auditor would be independent of management. He or she would report directly to the board. So they would do a lot of stuff on an interim basis, checking different departments and report to y'all.
Is that your report?
Mr. Doherty.
Goodness, you went through that quickly. And I don't want to belabor this, but I specifically want to go over here to the audit results. And if you can give us a little bit more explanations here.
Okay.
And I didn't want to interrupt you
That's
while you
okay.
were going on a roll there. But first of all, if we could talk a little bit on independent audit report on internal controls relating to the payroll software installation state retirement file.
Yes, sir.
If you'll turn to page 159 in the big book, there's really a lot more detail, and we can go through that.
Well, could you summarize that for
I
us?
can.
Okay?
The state retirement file is required, the funds are required to be remitted to the state for the retirement that's withheld from employees.
Correct.
By a certain time of the month. And on 7 occasions during the fiscal year, it was not timely filed with the state.
Question.
Yes, sir.
Is that also HR?
Yes, sir. But it used to be done electronically. Is it done electronically with GEMS, I believe? Yes, it was done electronically with GEMS, and during the other payroll system, it did not work, and it was having to be done manually, and therefore they could not do it timely. And it's a reportable condition for the state.
But on that particular item, if I could follow up, Mr. Chairman. From what I'm putting this in simple terms so I can understand it. If I'm wrong, please tell me I'm wrong. And that is, we had implemented a new software program
Yes, sir.
that evidently created a great deal of problems over not 1 month, but over 7 months. And as a result of that, there had to be some mishandling to where the deposits were not made on the retirement system in a timely manner.
Yes, sir.
And it produced penalties,
Yes, sir. And you paid the penalties.
and we paid the penalties.
I don't know the dollar amount off the top of my head.
I wasn't going to ask it. I wasn't going to ask that. But that was all as a result of the payroll system
Yes, sir.
that was implemented at HR.
Yes, sir.
Am I correct?
Yes, sir. Now, in January, when you went back to GEMS, I think they were only a couple days late, but that was a time crunch issue, and they were only a couple days late in January last year. You went back to GEMS.
Sure.
And they were just a couple days late, but they were on a huge time crunch
To implement.
to
going
get back to
GEMS.
GEMS and to get everything back, but, yes, sir.
Do you have any findings in here related to implementing the payroll system that was a lapse of management or controls or anything related to that?
Well, the 2013-1 on 159 relates to the lack of internal controls that were circumvented during the payroll software installation. We don't say who's at fault. That's not our job to say who's at fault.
Agreed. But
We just note that there was circumventing of internal controls during the payroll software.
Put
The prior payroll
Put that down
software.
to where I'm understanding, and that is somebody messed up and went beyond the internal controls to implement this.
Well, I don't discuss the implementation as much as the internal controls that were in place were circumvented in order to pay employees timely. And so they disregarded the internal controls that were in place
That's a better term, disregarded the internal controls.
in order to pay employees timely, which has a higher priority. You want your employees paid. So they circumvented internal controls to pay their employees. Now, mind you, some were overpaid and things like that, which are also noted in that same
Thank you, Mr. Chairman.
item.
Dean?
Mr. Daugherty's brought up an interesting point, is that the July 1st through December 31st was under the, it was under the old board. And are these the 6 or 7 months that this was going on? Because you've indicated here that it's 6 or 7 months here. Is that the time period? Is it from?
July.
Started the July payroll.
July.
Until we shut her down in January, I
And it
guess.
specifically states in the audit report that it was July through January of 2013. So
Yeah.
July of 2012 through
Right.
January of 2013.
Something that this board inherited, but in
Correct.
January, we shut it down. I'm just
Correct.
trying to- So any reporting that we received as a commission from July 1 until December, any reporting represents this from departments,
Any reporting represent.
from HR, or any of these adjustments that are having,
Payroll was under HR during
okay.
this period.
Okay, thank you, that's, okay. You just threw out something I wanted to make sure I was clear on. Thank you.
Anyone else?
Mr. Doty.
These are not findings as such, are they?
They are considered compliance findings.
They are
yes.
compliance findings.
We consider them compliance findings. But they were corrected by the end of the year, so therefore we did not consider them significant deficiencies. There's two different things. I know it's hard to understand, to you, to her, they're definitely two different things, okay? Because a significant deficiency is a whole lot worse in an auditor's mind.
My concern here is, will this have any effect with the oversight of our county financing on a state level in regards to this deficiency?
Probably not.
Probably not.
This has a definite starting point and a definite end point. And it was all contained within that start and end, and it was all contained to payroll. It didn't have anything to do with any other functions of the county.
This is deficiencies. Have you outlined, in your opinion, in this report, the financial cost to the county for this?
No.
No. Thank you, Mr. Chair.
Mr. King?
In your professional opinion, Paul, don't go anywhere.
I think he's looking at
If we, in your professional opinion, if we had have continued, because as you mentioned, the finance director knows the difference, but we have a specific and a significant difference in the first 6 months of the year and the second 6 months of the year. If we would have continued in your professional view, if we would have continued, would we have had a significant deficiency?
If the payroll bank accounts and the controls in payroll were the same as they were in December, and if they, by June, were the same, then probably so.
Most of the errors that occurred in July, August, and
Right.
partly September. So those large areas would not have occurred again in the next 6 months. But there was still lots of deficiencies going on until we switched back, or until the county switched back
Right,
to the previous system.
right.
So if it had continued on, it would have been, been still deficient.
That's, now, follow with that, Mr. Chairman, how important is that in the governance as far as the
LGC.
LGC, how important is this?
Oh,
I mean-
it's very important. Very important.
I mean, nobody wants to have significant deficiencies, and you are larger organizations. Small organizations might have a significant deficiency because of segregation of duties, because they don't have enough employees to have segregation of duties, so you can understand that. But to say you don't have segregation of duties just because you were circumventing them because you didn't roll something out right, it's not looked at in the same light. You can look at a segregation of duties, and their judgment would have been looked at differently. But, I mean,
what happened was
Yeah.
the implementation of payroll started out as a failure. And the county just kept trying. Every month, it did get a little bit better as they resolved some of the issues. But toward the end, there were issues that couldn't be resolved for whatever reason. Lost my train of thought.
Well.
Where I was going with it.
I appreciate the answer, because you've answered my question. Our finance director takes great pride in the last 5 years I've been sitting up here in making sure that our audits are just perfect. And I appreciate that, and we all do. But I also know that if we hadn't shut her down in January, as you just mentioned, we would have had a significant, with a capital S, deficiency.
What would have precluded all this from happening is where I was going with it. If they had run dual payroll or simultaneous payroll for the first month or two, they'd realized that it wasn't compatible, wasn't going to work. And it never would have been implemented. Until it was working.
Mr. Cromartie.
I just wanted to harken back to, I think maybe a prevailing thought that there was a change, there was an improvement after that 6-month period. But I just wanted to ask this question to clarify something. The problems were in the software. The problem was related to the software that was used versus where it was being done at.
It was probably as much in the implementation of it as the software.
Because $100 times 6.75% is $6.75. So I think it was on both sides. You know what I'm saying? I mean, software is how it's written. You know what I mean? So a payroll system is a payroll system. I think the implementation of that system, that the software provider did not understand all the departmental needs.
The software provider.
Right, did not
Person who got it
understand
from.
all, right.
So
Did not
then
understand all the departmental needs
Is that
for
was-
grants and things.
So then we switched back to the original. And the folk who were doing that was able to use that software where the software that was switched to, the provider didn't do whatever they needed to do. Therefore, the results didn't come out right.
Now, obviously, when you
I think
have
it's
a
dual
failure
response.
this significant,
Yeah.
there's a lot of fault to go around.
Yeah.
A lot of fault to go around.
Mr. Bell.
You know, I've been preaching this for over a year now. What we fail to realize on the board here is that there's guidelines, you know, from the beginning of the payroll system up to where it's keyed in. What we have done, we have jumped over all of the players, all the way up to the person that keyed in, and we want to blame that person as being detrimental to the system. Now, what we need to do, we need to go back, if we haven't done it, and make sure that every player, from the beginning until the end, have it right. And that's what we haven't done. We may have done it now, but we didn't do it for the first few, because all we could see was one particular person, the human resource person, and we didn't worry about the department heads, the supervisors, or nobody, just that one particular person. And we're gonna never get it right if that's what we're still looking at, because the human resource director don't know what an individual works. They key in whatever is reported to them. They have no way of knowing whether that person worked 168 hours or 20 hours. So I hope we take a good look at that before we keep pointing fingers. The system was flawed, or everything about it, in my opinion, was flawed. But we want to blame one particular office.
I think Bill was next.
Mr. Bates.
I can remember what I was thinking, what I was going to say. Well said, but I think there was a communication problem that was widespread with the vendor and the staff all the way through management. I really do. And the point that you just made just a minute ago, we could have run a dual system. I wasn't sitting here and wasn't part of that decision. But if that had taken place, I believe what you were saying is this would have never happened. But the change we made in the decision in January limited the scope of the damage, as he's saying down here, to a finding as opposed to a significant deficiency. I just wanted to be clear in my mind and put that out.
Yeah.
Thank you.
This has been, I've been on the board 2 years. This has been one of the things that's been on our mind for 2 years. And no matter how you slice the pie, the CEO that implemented this is ultimately responsible. But at the same time, he has admitted that he did not run a parallel system. He has admitted that he launched it 3 to 4 months too soon. And the bottom line is that there's plenty of blame to go around, but when you start out with junk, you're going to end up with junk, and that's what happened. It was not organized and tested in advance. And there's a lot of things that happen in government that are that way. I look, as a business owner, I look at the word responsibility. And to this day, there's not a soul stood up that should be responsible, has said they are responsible, or even been a part of it. That's what bothers me, is that 2 years we've been going through this, since I've been on this board. I started getting the calls early, right after my election, and we were getting calls from employees, and we've been going through this for 2 years, and it's still not resolved. The bottom line is that it was implemented at the wrong time. It was not organized in the implementation, and that's why we're where we're at today. Thank you, Mr. Chairman.
Mr. Doherty.
You know, I have heard that it's a software problem, it's a key-in problem, it's supervisor's problem, it's this problem. The bottom line that I understand, if I'm correct, and if I'm incorrect, please point it out. In your finding, it is basically stating that when it was implemented, that several internal controls were circumvented. Now that tells me that the controls were there, but as a result of this problem that we had, we circumvented the controls. Am I correct?
Yes.
Now, were the controls that were circumvented by the management of this county?
Yes.
Very well. So it doesn't make any difference whether or not it was a software glitch or problem or whatever. The problem that I see here is the auditor report. And you work for this commission. And you're coming before us and stating that we did our audit and we find this, and that is that several internal controls were circumvented in order to pay employees in a timely manner. Now, going on down here, it goes on to say that implementation of the new payroll system, segregation of duties in the payroll department were ignored. The payroll bank account was not reconciled for several months. I cannot imagine my personal bank account not balancing for several months, but the County of Wayne's bank account was not reconciled for several months because of circumventing the policies. Am I correct?
Yes.
If I'm incorrect, please state so. So, the problem that I see here is that after we got through with everything, the bottom line is our auditors have come to us and said, hey, you got a problem here. There were policies that you had in place that your management circumvented. And it doesn't need to happen again.
Correct.
Am I correct?
You're correct.
Thank you, Mr. Chairman.
Mr. Chairman, I'd like
Mr. Camardi.
We did,
along the side of each circumvention, can you determine at what station that happened? I mean, Because I say this, and because I just want to clear up something. We talk about, I don't know whether when you said management, you've been all the way at the county manager's office or under his management. Because I'm trying just to figure if you, for each one of these things that happen, so that they are less likely to happen, is there some sort of little space in there where it says specifically which station it happened in?
Well, we also put in here that in January 13, that the county commissioners took action and corrected the situation.
Okay.
But, for example, county finance did not have access to timely reconcile the bank accounts. So once they had access and received the reports they needed, they were able to catch the bank accounts up once they had access to those reports. And so she is a form of management. So when I say yes to his question, she is a form of management. So is one department. And as far as, segregation of duties in the payroll department, you had HR manager and payroll administrator both entering payroll, which in the past would not have happened under the GEM system. But in the Ceridian system, you did have that happening.
In my heart, and so I think you've answered my question and gotten to the heart of it. There just wasn't any one person or any one spot or any one door.
No.
It was a combination of a lot of doors.
Correct.
And when you use the word circumvention, I know that is a perfect word to use from your side of the table, but I also hear you say the circumvention was done because getting the person's pay was a higher priority
Correct.
than the non-circumvention. I just want to get
And we
that
also,
part
we
of
go
it.
on to say that, we did other tests.
Right.
And we did other tests to make sure there was not fictitious employees, to make sure that somebody wasn't paying themselves twice or 3 times.
Right.
And we did other tests to get other assurance, and that's why it's not a significant deficiency,
As Joe
to do
employee
our
sitting there
job.
waiting for my check, I would a lot rather person take a pen and go in there and add my money up and draw down there what I need to pay and write a check for it than wait on a
Right.
computer system wasn't gonna work. And so when you use the word circumvention, just for public consumption, I know that's a great word, but circumvention suggests that it might have been something not for the
Right.
greater good of the greater group. That's all I want to put.
Mr. King.
Just make a comment then on, the way I understand it is that in July to December, you had too many hands in the pie.
Right.
And in January, this board, sitting here today, shut that down, and we transferred that responsibility in January or February over to the finance director to handle it. Now, I want to be right on my dates.
It was April.
April.
But you went back to GEMS, which went back to the old procedures.
Yes.
So-
So to answer the commissioners, to have clarity on my part, to understand the commissioner's comments, is that, yes, there were too many hands in the pie in circumventing one department and another department and trying to get it all right at the responsibility of the finance director, who is ultimately responsible by statute to this commission, that every penny the LGC says has to be right falls on her shoulders. Is that correct? Now, that was not happening where she could give the commissioners a balance, because she could not get this hand to tell this hand what it was doing in this department. Is that correct? From July till December on the payroll system?
Correct.
Okay. That's all. I just want to make clear. I understand that
One last comment.
all this was happening. Thank you, Mr. Chairman.
Mr. Doherty.
Before I lose my train of thought, you open up another
Sorry.
Pandora's box. But if I'm understanding you correctly, someone in management made a directive that excluded our finance director from having access to the payroll information. Am I correct?
She couldn't log on to the system.
She could not log on to the
Correct.
system, so somebody has
Correct.
excluded our finance director. By statute, is supposed to have access, Is this one of the circumventing of the policies that you're talking
Well,
about?
correct. She could
Okay.
not access
But that's pretty
reporting of the...
substantial in my mind, that a finance director that is working for the county, is responsible for these, doesn't even have access to the payroll system to get the reports in order to balance out our bank account.
Correct.
Am I correct?
You are correct.
Now, let me clarify that.
She had
That
some
could not be
printed
done
reports.
by a clerk working down in the payroll department.
She had some printed
Someone-
reports, but they were not helpful because they were 1,000 pages long and,
Well, but
you know,
somebody had to make the decision
to not add her
exclude
access to that system, correct.
someone.
I don't know
in-
who that made that decision.
Someone had to make the decision to exclude the finance director from having access to the new payroll system.
Correct.
Now, that was not done by a payroll clerk.
I don't know who made that
That she
decision.
would, that person wouldn't have the authority. It wasn't done by the board. The board did not make a directive saying that the payroll clerk could not, not the payroll clerk, the finance director did not have access. That had to be done by someone in key management position, in my opinion, had to be done by the manager of this county of excluding her from having access. Am I correct or not?
It would be either
Logically, it seems.
It would either be the county manager or the human resource director would be my guess. One of those two were the ones working with,
That to
The
me,
payroll provider.
that to me says a great deal. It says a great deal. If you are going to have statutory requirements of a finance director to oversee the finances of our county, and you are going to make a directive to prevent her from having access to it, that's pretty substantial in my opinion. Thank you.
Mr. Chairman,
Mr. Bell.
I'd just like to say this. I think we're trying to throw some stones here. Now, there was some decision made by this board, the county manager, and a few others, and some of these people that's talking about them and they were on the same board that I was on. And it doesn't sound, you might as well go on and call names. I mean, if you're gonna just throw it out the way we're doing it. I don't think there's nothing illegal about the system that was set up. It may not have been the best management practice, but it's not illegal. So if you're talking about legal and legalities and all that kind of stuff, I mean, we're fishing for something here, and I know these guys pretty good. So they're fishing for, and they're trying to make you, as an auditor, say what they want to say. I don't like that. I mean, it's kind of silly here what we're doing right now.
Mr. Chair,
Can I make a comment first?
you're the chairman. But I would like to.
All we ask is for you to report to us what you found. Regardless of where the blame
Yeah.
falls, report to us, and I think you've done an outstanding job. Now, Mr. King.
I think so too.
Respond to the commissioner that made the comments just then, not the chairman, but Mr. Bell. It's not silly when
Your county manager book said you're not supposed to debate what one other commissioner said.
Mr. Chairman,
State your
if I
own
may.
opinion.
Okay, Mr. Chairman, if I may, in response, is that I can say I am not, Mr. Chairman and fellow commissioners, throwing stones and trying to get someone in trouble. I took an oath, as we all did, to get to the truth, and we have expensed a lot of citizens, taxpayers' dollars to get to the truth in this matter, and it's taken a couple of years. And we are today looking at the fruition or the end of a very thorough report that our auditors, that we put so much trust in, has given us. Mr. Chairman, as Commissioner in District 4, I'm just trying to get to the truth. I'm not casting stones. Thank you, Mr. Chairman.
Anyone else?
Yes, I'd like to make sure that Mr. King understand that he was on that same board for 4 years. So you can't exclude himself from the decision that was made up here on this board.
Mr. Chairman.
Mr. King.
I can only ask that you research the records and see my vote. Thank you.
Mr. Camardi.
I would like to make a motion we accept the audit report.
I have a motion on the floor. Any more questions or comments?
Yes, I do have some more questions.
Questions?
Go ahead, Mr. Jackson, Mr. Doherty.
I want to move over to the independent auditor's report on federal programs, where you were stating that there was some evidently eligibility findings on WIC and subsidized childcare. Am I understanding that in that audit, you had found that our staff had, for whatever reason, allowed eligibility when it was questionable as to whether or not they were eligible?
Yes, sir.
And do you have the numbers?
Well, with WIC, it was on 6 cases out of the 75 files that I tested. And on child care, it was 4 out of the 75 cases. However, they test their cases every 6 months. They review them. And the subsequent one and the one before, the person was eligible. So it was probably just an administrative error, but we don't give them passes. If I had found one, maybe, but we don't give passes. So.
And have you talked with the Department of Social Services regarding implementing
they're
some
aware of it.
controls there?
Mm-hmm. Oh, and for WIC, she had a meeting within a week.
Okay.
She was all over it within a week to
Right.
correct it right away.
And that was just errors, basically.
Yeah, and it happens. We
Sure.
we have findings every year in programs that we test. It's not abnormal to find, because it's just human error.
And then if I can just go back for just one moment here, there was one other thing that I have to
Okay.
make a note as you were talking.
Okay.
That concerned me, and I want to go back to that, and that is, did you make a statement that the HR director was actually inputting into the Ceridian payroll system?
My understanding is when I asked questions on specific overpayments or something like that, my understanding, I was told, was that, well, the payroll clerk had entered this, and so had the HR director. So sometimes they would both enter a change, and that's why somebody might have gotten overpaid, is how a department head was told. Or when I would go over it, with a department, when I was doing those testings. When I was doing those payroll overpayment work, that would be the explanation I would get if somebody was overpaid. Well, we sent a correction, and we were told that both of them entered the correction. That's why this person got overpaid. So my understanding is that they were both keying in pay sometimes to get the payroll done at the same time. So usually in the past, only the payroll administrator handled payroll. Your HR director didn't do anything with payroll
Well,
in the
now, that's
past.
pretty substantial in itself. I mean,
Right, so
it would
with the
just
newer-
make sense that if you're going to have input into a program, you have one person that it controls that.
Or-
If you have several people inputting it, you're going to have possibility
Or
of
you-
double entry.
Or if you have several people, you just do it by department. You don't all enter changes. You know what I'm saying?
Well, sure I do.
So you're responsible for
again,
these departments, and you're responsible for these
And
departments.
I'm asking this, and I'm not trying to throw, if we don't see where the problems are, we cannot implement policy to ensure that it doesn't happen in the future. So it strikes me as really important that we have the director of HR make an input into the system while at the same, by their admission, by the same time that the payroll clerk's doing her job and inputting it, so it's a double entry.
Right,
And certainly, we have a policy and a procedure that would prevent that,
certainly.
but it was kind of circumvented.
Right, and with the newer system, I think to get people paid on time, they were both trying to get things corrected and fixed in this newer system to get paid done on time.
And so
was my
that is their
understanding.
explanation on some of this overpayment.
That was the explanation given to the various departments when they would question why this person was overpaid or something.
Goodness. Thank you, Mr. Chairman.
Most of my
Mr.
questions
Pate.
have already been answered, but with all the questions that Mr. Dollar was asking. But it's cost to the federal and state programs, you said, correctly, does that mean we've already paid back what we?
No, you didn't have to pay that back. What happened, it was actually a recommendation by the state not to make that a finding,
Okay.
but just to make it a management recommendation, that in the future, they don't just charge it.
You said part of it was because the software actually did it anyway.
The IT virtualization project was just charged across the board to all the various departments in the county.
So they have a routine test that you said is correct on the number of people they identify, that kind of thing, eligibility, that kind of thing. So
Oh, you're talking about
that's
the
ongoing.
eligibility. I thought you were
Yeah.
talking about the charging of cost recommendation, sorry.
Well, I guess I'm talking about two things. I guess some of the people that your eligibility, you may have charged some money that you shouldn't have charged to one or the other, or is it, we're talking about two separate things?
Two separate things. The eligibility testing, they were still eligible. If you looked at like a 6-month review after, the people were still eligible. It was just an administrative error where somebody didn't verify something, or they might have verified it and they didn't sign off that they verified it.
Okay.
So if somebody from the state came in behind us and found the same thing, they would come to Nunn Brashear and say, why didn't you find it? We found it.
I understand that. And
You
it's
know.
always going to be a certain level of error on eligibility.
Right, everybody's
But
gonna-
the other part was the.
The other,
IT
the
part.
charging of cost comment, what happened is, there's an IT virtualization project, and they just automatically charge cost to all the programs.
The state looked at it and they understand.
And the state was fine with that, but what happens is, when you buy like computer equipment and things like that, in the WIC program, you have to ask for that at the state level, and get permission from the state to pay for that. And so when I was verifying that this item that was authorized by the state, this virtualization project was not authorized by the state. And so, but the state just said, make it a management recommendation, and I didn't need to make it a finding.
Thank you.
Because the WIC program itself didn't have any control over that program, that item being charged to them. It was done, from the county level. They didn't have a whole lot of control. If they had went out and bought a computer, then it probably would have been a finding and not just a management recommendation to check those things in the future.
Mr. King.
Mr. Chairman, do not want to prolong this, but I would like to ask the clerk if I could get a motion, whatever that motion exactly was. We're still in discussion. So what was the motion?
Mr. Cromartie's motion was, let me back up.
To accept the, yeah, I made a motion to accept the
Accept.
audit report
Wait a second. I'm sorry, I can't hear both.
and move on.
Motion to accept the audit report.
Okay. Is this the audit report?
Yes.
Is this the audit report?
Yes, except the two letters in the back, the management letter and the audit committee letter, those are specific letters for, like, the board, that isn't necessarily considered part of the audit. They are
Okay.
letters we issue.
Okay. So I understand that, then the last two tabs, it says audit committee letter and management letter.
Right.
Okay, but everything else is part of the audit.
Yes.
Okay, motion's on the floor, we accept the audit, so we're in discussion. Now, my part, and I want to finish this up, Mr. Chairman, on my part, is that in this, you have a tab that concludes your report, it says compliance.
Yes, sir?
Okay, that's part of the audit. Okay. To bring us in compliance, you have made recommendations. Is that in the audit?
The management letter and the audit committee letters, they are part of our audit. They don't necessarily, you don't post them on your website, but they have been given to like the LGC and things like that. So yes, they're part of the audit.
Can we see those recommendations, please? Do you mind?
They were the next to the last page of the PowerPoint. Or, no, sorry, last page of the PowerPoint, I'm sorry. Right,
That's the last.
that one, sorry.
Mr. Chairman, I don't want to get in the weeds with all of the recommendations, but I want to, I really appreciate this firm doing what they've done, bringing out the truth and giving recommendations. Because I'm just a layman here, I don't know it all, and it takes people like this to help me through and get into protecting the people that I represent, and of course, the people of Wayne County. I like the recommendations. I appreciate Mr. Cromartie making the motion, but I want to make an amendment to the motion to include the recommendations. But I know the last recommendation is the internal audit function, and for an internal auditor, it's going to cost. It's not part of our budget. It's been indicated in here that one is needed, and it's asked that the finance director be a big part of putting the job description together for an internal auditor. I believe our finance director at one time was an internal auditor. Is that correct? And we certainly got a great financial director here with us, and she started in that area. And one of the recommendations here out of four, Mr. Cromartie making the motion, I'm not offended by the motion. I'm certainly in agreement with that, but these are recommendations, and I want to amend the motion that we accept these recommendations and move forward to see what the cost of the internal auditor is, so we can get direction from this person as indicated in this audit. So I'd like to amend the motion that we include the recommendations in your motion.
I have a motion on the floor
Amendment.
and an amendment motion on the floor. Is there any more discussion on Mr. King's amendment?
Mr.
Mr. Cromartie.
I stand not insulted by having an amendment added to my motion. I was intending to accept all of that which you had said as a full acceptance of your recommendation to accept the audit. My intention to call for a vote was to limit our conversation to just what you all came here for and not all the other conversation that ensued because of it. Thank you.
Mr. Darty.
On your audit results, you have on here an insurance audit program. Am I understanding that under our self-insurance program, over $8 million a year under that program, administered by Blue Cross Blue Shield, that there is not an audit of that?
Unless Blue Cross Blue Shield does it, I'm not aware of one.
Can I
So I
interrupt just a
don't-
minute?
I don't.
Do we need to act on Mr. King's motion before Mr. Darty?
I think that's a discussion on his amendment.
Okay,
Yeah,
all right.
I mean, this is part of his motion,
It's a lot of
and
things. It's just that
And that really concerns me now, that we have got an $8 million self-insurance fund that you all did not conduct an audit on.
Well, typically, on those type programs, you don't have an audit. And as part of our test work, we discovered that there were some deficiencies there, there were mistakes that were being made, some overpayments being made, people receiving benefits that shouldn't have. And as a result, we suggested that that program be audited internally.
Have you, in the past, audited or reviewed the insurance, the self-insurance program?
We audit like the balances of what's spent and things like that. We don't normally go to detail level.
So you're telling me that basically...
This was just a random test.
I
We
understand,
sometimes throw something new in every year,
I understand. So you haven't been doing that in the past?
not this test.
But in that random thing that you just did, you found some possibilities, or in fact, where individuals were receiving some benefits that were not entitled to.
Correct?
Is that correct?
Correct.
Well,
We-
I appreciate the fact, and again, I look at this from a standpoint of seeing how we can improve the system. Where there are problems or possible problems and how we can improve it. And I I agree with you. We need to have some way of going back and checking what transpired and audit a performance of that program, as well as you doing an audit on the county as a whole. Thank you, Mr. Chairman.
Anyone else?
Mr. Chairman,
Mr. Pate?
just ask you, read back the
Again,
motion
this
by
is where-
Mr.
oh,
King,
sorry.
if you would, because I was going to speak to things you speaking to too, but you've already done it. But I just-
My amendment to the motion was to accept the recommendations of the auditor in this report to implement these programs. That's my amendment,
Okay.
that we approve it contingent to these recommendations from the auditor,
I'm fine.
which are listed right there.
Anyone else? All right, we need to act on Mr. King's amendment first. There's no other discussion. All in favor of Mr. King's amendment to Mr. Camardi's motion, raise your right hand. Motion carries unanimous. Okay, now we're going back to Mr. Camardi's original motion.
With the amendment, as
With-
amended.
with- As amended. Okay.
As amended.
Is there any other, can I open it back up for discussion?
Would be, the discussion would be
All right,
appropriate.
discussion.
Just a quick point. My financials always show a comparison of the previous year, and I really would appreciate it if we had a comparison to the prior year. Can you produce that for us?
If you go to the schedules in the back, you get 10 years worth on a lot of them. So like page 125 through 133, a lot of them are comparative
Oh, okay, I see.
for a lot of the statements.
Well,
Because of the size of the statements, you don't normally make governmental statements comparative.
understand. Well, could you possibly direct me in this large document?
Okay.
Just a comparison in regards to last year's to this year in regards to an increase in revenue, increase in expenses, and our balance on our fund.
Okay, so, like if you want general fund.
Okay.
It's 130 to 131, and then 132 to 133. So, 130, 131 would be like your balance sheet, and that would, you'll see a change again. They like to change how we report things, so you'll see in 11, it kind of changed how you called the words.
Right,
But
right.
that's there. And then, 132 to 133 is kind of your revenues over the past 10 years. And this is what gets them the CAFR award, because they present all this statistical data in the back and 10 years' worth of information.
So if I'm looking at 133, on the net change in fund balances, there was a 2.4 million change
In all governmental fund
in
balances.
all governmental.
Yeah, this is all
Was
governmental.
that a decrease?
Yes,
Because it's in parentheses?
yes,
So we reduced our fund balances by 2.4 million.
yes.
Is that correct? Thank you, Mr. Chair.
Which ties to page 130. So if you want the statement that this information compares to, it's page 30. Okay.
Any other comments? We're going to vote on Mr. Camardi's motion with the amendment attached to accept the auditor's report. All in favor, show a sign of right hand. Motion carries unanimous. Thank y'all so much.
Thank you for putting up with me.
I'm learning.
Right back up, we did.
Thank y'all.
Thank you, thank you so much.
Or we're going to break for lunch. Do I have a motion to break for lunch? I have a motion on the floor, we break for lunch. Any discussion? All in favor? Aye, or raise your hand. Raise your right hand, Bill. Raise your right hand.